Hello, welcome to week 2 of ARTM 455. I'm Henry Fogel, and with me is Ralph Creviso, and we're going to talk in this video about business models. What is a business model? Why are they important? And what are the essential elements of business models for nonprofit corporations, specifically performing arts organizations? Ralph, you may have some thoughts on this.
Yep. Uh, Business model is essentially how the priorities of the organization are determined and then executed. So think about it as a way of doing business. And business models are the essence of how an organization functions. So, Henry, with your permission, I'm going to do a screen share.
Okay.
And what we have here is a business model schematic. And I'm going to walk you through it. And then we're going to talk about how performing arts organizations apply this. This business model I'm showing you is generic. So it's really written in the context of a more traditional business that creates either services or products. But keep in mind, a performing arts organization does have a product. So what we have here in the center of the chart is something called value propositions. And this chart is located in Blackboard and is available for you to view. The value proposition is exactly what it says. Why does the organization exist? What is the value it brings to the organization? Why does the organization think it can sell its product and raise money if it doesn't have a value proposition? And this is usually embodied in what we call the mission statement, which is the other aspect of this week. We're going to talk about the business model. Your assignment for this week will be to understand and have some exercises around what mission statements are. So the value proposition is reflected in the mission statement. Once you know what you're about, then you have to determine, well, how do I create it and how do I execute it? And if you move to the left of the chart, the first thing you look at is the key activities. What is it you have to do to realize the value proposition? And for a performing arts organization, that's going to be, what is your product? The activities could be mounting a theater production. It could be developing a program for a season. And in order to do that, you drop down from key activities and look at what are the resources you need in order to produce that activity. And how is that aligned to your value proposition? How do those resources impact your relationship with customers? And how does it generate money? In going now further to the left, can you do this by yourself? Or does the organization need to partner with other organizations in realizing its value proposition and executing its activities? Now, for a business who produces a product is made of many different components, and the partners would be the companies that manufacture those components. So if I'm Boeing and I'm producing an airplane, I rely upon a lot of partners to produce the components that go into that airplane. Well, in a performing arts organization, the partners are essentially the community and the donor population. Who are you looking to partner with in order to mount your activities? For a theater, partners may actually be other organizations with whom you relate if you are presenting their product. And Henry, you might want to talk a little bit about how that might work in a performing arts organization.
Well, and I was actually going to add, Ralph, for the theater community, but really in a way for all arts organizations, the partners are also the performers that they bring in. Not now, one group of partners for an orchestra are the musicians you employ. Yes, they're your employees, they're also your partners. They're the reason people buy tickets. As I said last week, nobody buys a ticket to see you manage. But in addition to that, you have guest artists that come in. For a theater company, It's the pool of actors that you draw upon, maybe from all over the country or even the world. Those are also your partners. And working with them, as well as working with whoever supplies what you put on stage, if you're a theater company, your props, your scenery, your costumes. You may have technicians. In an orchestra, you either own the hall, in which case your partner is the carpenter you hire, the electrician you hire, the security guards you use, or you're a tenant, in which case the person or the organization from which you're renting is also a partner. So it actually gets very complicated. And when you think about relating to the whole community, key partners are also community organizations. If you're an organization that feels we don't relate well enough to communities of color, your partners are organizations that represent those communities with whom you have a dialogue.
And a partner could be the mayor of the city.
Yes.
It could be the head of the Chamber of Commerce. Because it's through those individuals that you establish your connections to the community, which becomes the source of contributed revenue. If you take this now and go back to value propositions in the center, and let's move to the right. Well, who are you trying to attract who will pay for the service that you're providing? Customer relationships. How do you attract an audience? How do you grow an audience? How do you integrate their needs and their wants to your activities? And channels below that is essentially your marketing function. How do you reach that audience? What are the mechanisms? Traditionally, that's been done through advertising, through both print and media, radio, television. But more and more, it takes a social media aspect. And that's becoming a growing aspect of channeling, that is accessing your audience. And the business model is changing as the technology changes. And in your technology course that you'll be taking in the spring, this whole concept will be developed further. Moving further to the right, customer segments. How do you think about your audience? Do you, if you're in a theater, are you presenting Shakespeare? Is Shakespeare enough of an audience segment to maintain your business? Or do you need to bring different kinds of theatrical productions that will generate a different audience? And Henry, you might want to talk a little bit about that.
Well, I think there are so many different approaches, but usually, even for example, Chicago Shakespeare Theater, only 2 of the 5 plays they do in any given year are by Shakespeare. Others sometimes have a relationship to a theme that Shakespeare developed or worked on, but probably their thinking would be, if we just keep repeating Shakespeare plays, we're going to bore our audience. If we're an orchestra and all we play is Beethoven symphonies, Beethoven is great, maybe the most popular and successful composer that orchestras play, but you can't just do that. So how do we vary it? I also think you have this question that comes into, for whom are we creating value? Who are our most important customers? Are all customers equal? Or are the customers who are also the biggest donors more valuable? And this is not a simple question, and we're not going to answer it. I think our role is to point out that it's a question that you have to look at. And do the people who have great deal of money dominate when you start talking about what you're going to present? And if they do, is that right? And how does that match with your mission? It's a very complicated area, and one that organizations can struggle with. And then if you go to the bottom of the chart, you get into cost structure and revenue streams, which I'm going to ask Ralph to talk about a little bit too.
Just want to add customer relations and customer segments. This is structured more in the sense of a business. When you think about performing arts, customers include donors, because many of your customers are also donors. And what you'll see in the fall when you take the marketing course and the fundraising course is the interaction of marketing and fundraising. So dropping down to the bottom, how do you establish a budget to do all of this? That's what's on the bottom of the screen. What is your cost structure? What are your expenses? And we'll spend some time talking about the revenue streams for a performing arts organization coming up. I believe that's next week. But the cost structure, what is essential to be done? What does it cost? What do you have to purchase? What do you have to plan for in terms of expenses? Do you own a theater? Do you rent a theater? Do you present where you are going to be paying a fee and then you're going to be selling that and getting proceeds from the box office? Or are you going to produce, in which case all of the cost is yours? And then the revenue streams is, where does the money come from? And is the money coming in adequate to support the cost structure? And as you get money coming in and you have the cost structure, is that supporting the value proposition? And are you executing the value proposition by doing the right activities and accessing the right audience? And I'm hoping that this discussion now is bringing this whole schematic into some sense. Henry?
Yeah, I think that one of the things that we will cover more in future weeks, but that will probably surprise at least some of the people, that some of you who are taking this course, more and more in performing arts organizations, a higher percentage of revenue comes from contributions than from ticket sales. And with that being a fact, when you start thinking about the business model and how you operate the business, that's part of what you have to think about. And it's why for example, in a symphony orchestra, the largest department in the management structure is the development department, the fundraising department, because they bring in a lot more money, and it's also a much more complicated job. I mean, marketing, you have to tell people what you're programming, present it in an attractive way, and they buy tickets. Contributions, it's a much more complex job to get them. And so I can tell you at the Chicago Symphony, when I managed it, on a whole management staff of about 70 to 75 people, 25 of them were in the fundraising department.
And interesting, Henry, usually the second highest paid individual within the management structure we talked about last week is the vice president of development or fundraising.
Absolutely.
As we bring this to a close, for the Zoom next week, one of the exercises we're going to be doing is comparing a for-profit and not-for-profit business, talking about this business model. So one of the things that Henry and I would like you to be thinking about is, what are the differences between a for-profit business and a not-for-profit business? And as a little bit of a peek for what your activity will be in the Zoom, let's assume you're a hospital. And one hospital is a for-profit hospital, and one hospital is a not-for-profit hospital. What are the differences between those two organizations? And think about it in context of this schematic. And on that, we'll give you something to work on. You have a couple of assignments on mission statements, and when we do the Zoom, we'll bring this all together.
Thank you.
Thank you, Henry.